Now, Nigeria's economy for 2021 was clouded with high inflation, mass unemployment, and rampant instability. Assuming that the currency stabilizes in the medium term as oil exports continue to recover, the outlook will become slightly brighter. Now, however, analysts said that policy choices by the central bank created macro imbalances, and while the government was unable to get a handle on multiple security crises bubbling away across Nigeria. Now, these indices created a growth profile that falls well behind potential. Now, some analysts have said that the year 2022 will probably not be significantly different from the current year, as widespread poverty, high unemployment, and also falling consumer purchasing power are expected to persist. Now, we'll be discussing this, and we have in the studio an economist and also a member, business manager, and governing council of the Nigerian Economic Society, Dr. Taifa Abraham, in the studio. And also join us virtually via Skype is a financial analyst, Mukhtar Mohammed, who will also be joining the conversation this morning. Gentlemen, welcome to the program.
You're welcome. And now, Mr. Taifa, before we start with you, let's link up with Mukhtar Mohammed, who is now on standby, a financial analyst from Lagos. Hello, Mukhtar.
Hello.
It seems we have a breach, in transmission there. Now, let's kick off. Mr. Taifa, can you give us, can you walk us through how the economic outlook is in 2021 as we look forward to 2022?
Yeah, thank you very much. We came into 2021 fiscal year with the hope that we attain a GDP of about 3% coming from the COVID-19 impact on 2020. We came into 2021 hoping to attain an inflation rate that will be way lesser than 13%. We came into 2021 with a total government spending size that was projected to be about, that was approved to be about 16.39 trillion, and then later raised using a supplementary budget again. In terms of hoping to be financed using borrowing, that's what I mean. We had a total spending size of 16.39 trillion, hoping that to be funded mostly with borrowings, meaning that our savings were not doing too good. We came into 2021 with unemployment already double digits. We came into 2021 with a health system that was struggling, massive level of insecurity, high level of food prices, and insecurity affecting the entire food supply chains. So as we moved into 2021, we saw that the government employed its weapons of monetary policy and fiscal policy, as well as income redistribution policy, in order to see how they can use this policy, counter-cyclical policy measures to attain price stability in terms of low level of inflation, stable exchange rates, and address the issue of unemployment. So generally, why government effort was majorly through expansion in spending, which was largely financed through borrowings. What we recorded in terms of our domestic economic health was that we saw GDP improve from a 0.15% in the first quarter of 2021 to 5.01% in the second quarter, and then presently that we are doing 4.01% in the third quarter. So in terms of our domestic balance, we saw an improvement in economic growth, but has not translated to improvement in employment and poverty reduction because of the time lag that this growth variables takes to impact on development variables. On the external health, we saw an exchange rate that was above $50 billion, but declined to about $30 billion, and then rose in December towards the last quarter or 2021.
Okay.
But it rose not because our export is strengthened, but because our borrowing. So IMF was contributing, China is contributing, and because of the need to be able to maintain a healthy external balance to be able to finance or support our borrowing. So this is how the economy came in terms of 2021. Okay. Growth that didn't translate to job creation and external reserve that was strengthened, but because it is expected to make our borrowing capacity very attractive.
Okay, so we'll come back to you, but let's get also perspectives from our virtual guest who is joining us via Skype from Lagos, Mukhtar Mohammed. Let's have your own assessment of, you know, the I would say the economic performance in the year 2021. Okay, so we will reconnect with Mukhtar. Unfortunately, we are unable to do so at the moment. All right, you may continue. You know, I want us to take this, you know, indices, you know, from each of them, you know, and have a review. Now, talking about the GDP, where were we, and where are we now? Are we where we, you know, expected it to be, you know, from the beginning of the year?
Okay.
And what are the challenges that, you know, why are we not able to meet up the target?
Great. Economically, we measure our economic performance from the domestic side of it and the external part of the equation. On the domestic side, that's where we're looking at aggregate consumption from government, private sector, businesses, consumers. We're looking at total investment from government, private sector as well, state government, everyone. Then we're looking at government spending from federal, state, and local government. These three macroeconomic variables helps us to measure our domestic absorption capacity when we look at the consumption, investment, and government aspect. Then on the external aspect, we're looking at export and import, but we're more concerned about the net export in terms of how our export is performing really vis-a-vis import. Now, on the domestic aspect, the key variables we look at is GDP, gross domestic product, inflation, exchange rate, interest rates. All these variables are growth variables. Then your question right now is to ask where we are, how we are doing in terms of GDP. So the essence of my introduction is to let you know that GDP is just one of the indices we use in assessing our domestic macroeconomic health. But GDP seems to be this most attractive guy on the block because it is something that tells us the general, it gives us the monetary value of total goods and services produced within an economy by residents and citizens of that economy across all the local government, states, and the federal within an economy. So economies like that of emerging countries like Nigeria, GDP is a big deal because of our weak capacity in terms of export and to be able to assess how we are doing in terms of boosting domestic investment and helping small and medium-scale businesses to grow. So GDP is a big deal for our domestic economic assessment. Many economists and financial analysts don't really like the GDP measure because, like we defined earlier, it's just a monetary value of all goods and services. Some people want to see how GDP translates into happiness, into per capita income, into job creation, into poverty. But as it is for now, as weak as GDP may be, that is what economists still use to compare themselves across globe. Now, Nigeria as a country has GDP, but the state governments don't have, at subnational level, states don't have GDP, but states have inflation. So when the concept of the GDP calculation is to look at the total monetary value of goods and services, like I said, and see how they've changed within a year. Now, in terms of 2021, compared to 2020, in 2020, we had a GDP that was doing about 0.11% for 2020 as a whole. Don't forget, in the context of the economic recovery and growth plan, we were hoping that our GDP by 2020 will be 7%, but we ended 2020 with a GDP that was less than 1% because of the impact of COVID and challenges of being able to consolidate on 2017 growth into 2018, 2019, and that was dragged down by 2020. And don't forget, already the baseline for the ARGP was 2016, and that baseline year already was economic recession year. So this challenge has affected our country's capacity to attain the goals or the targets that was mapped out in the economic recovery and growth plan. So in terms of GDP, we succeeded in growing in the first quarter of 2021 from that 0.11% to 0.51% in the first quarter of 2021 and moved further in the second quarter to 5.01%, but by third quarter we declined slightly to 4.03% or 4.01% thereabout. So that shows you that we have in 2021 we had our GDP improved, but it is quarter on quarter improvement we are looking at. By the time the year ends properly, we'll be doing a proper year on year, comparing the full 2021 GDP with 2020, so that we'll see where we were. But so the concept is that businesses are growing, consumption is growing, people are having ability to pick up in businesses, but GDP is weak to measure whether that growth has translated to poverty reduction or employment creation, as it were.
Now, from your explanation, it seems that we are way behind potential. Some experts have actually said that policy choices by the Central Bank of Nigeria are responsible for creating, these imbalances. Is that so in your assessment?
The Central Bank of Nigeria is responsible for monetary policy. In this economic discussion we're having this morning, I started by letting us know that we have a domestic absorption aspect. And our counter-cyclical policies in economics is either monetary policy, fiscal policy, and sometimes trade and income redistribution policy. The apex bank, which is the Central Bank of Nigeria, is the umpire of the monetary policy aspect. And what that means is that CBN tries to achieve macroeconomic stability objectives of full employment, job creation, balance of payment, stability, and then inflation stability. CBN seeks to achieve these four objectives using its own monetary policy tools, open market operation, which includes money supply, interest rates, demand for money, and things like that. So what CBN does is that if there's inflation in the economy, if there's inflation, general price of goods and services is increasing, CBN withdraws money in circulation by selling treasury bills to commercial banks. When CBN sells, commercial banks will buy. When commercial banks buy, the money in circulation reduces. So when domestic savers, investors go to the banks to make to demand for loans or loanable funds, the money in circulation will be low. So this is how CBN uses it in reducing money in circulation so that it will target inflation. But when CBN continues to withdraw money in circulation, but the inflation trend is not going down, then it signals to CBN that there's an abnormality in the inflationary monetary policy link equation. That was monetary policy efficiency and effectiveness in reducing inflation is being weakened by some other exogenous variables. So CBN begins to innovate by the kind of policies you saw central bank did under is doing rather under Governor Emefiele, by intervening in sectors, intervening in small-scale businesses, even in imports, even in grains, agricultural produce. The concept is that the policy of CBN of reducing food inflation through monetary policy, money supply, is not achieving that desired target. So if they notice that the price of maize is increasing, CBN now innovated through Anchor's Borrowers Program and many of such programs, including the 100 for 100 policy, to help businesses that are not growing because of weak credit to have better credit, and then to even target food crops where the price of them is very high to help intervene in that sector. But the whole idea for CBN is to ensure that they achieve reduction in overall food prices so that people can see that reduction in inflation can actually translate to food inflation. So this is where CBN innovated a lot. And for many analysts, the thinking is that CBN intervened in other sectors, in agriculture, in industry, thereby making it difficult for those sectors to game their own policy programs for those sectors. So I largely agree that CBN intervention in these sectors created a bit of policy somersault in all these respective sectors. What is required, or what was required at some point, is for CBN to work with those specific ministries, which I know CBN did, to ensure that there's harmony in the policy coordination. But CBN taking the lead role openly is something that should be checked going forward in 2022. If CBN wants to intervene in maize, for instance, there should be a back channel where they collaborate with Agriculture Ministry effectively, so that Agricultural Ministry will be the one announcing. Because once CBN announces its policy intervention on TV, agricultural policy players follow CBN direction, and the Agriculture Ministry or the sector becomes the one following CBN, and it begins to create some kind of bad blood in terms of fiscal angle and monetary policy as mix. So these are some of the challenges that led to those analysts saying that CBN's policy affected the balance of the economy.
Okay, so I would slightly take you back a bit. You mentioned earlier that at the beginning of the year, we recorded some growth in terms of GDP. But somewhere along the line, there was a decline. Could you wrap our heads around the reasons for that decline, somewhere along, within the year? What exactly happened? Yeah,
precisely in the second quarter of 2021, our GDP grew from 0.51%, meaning from less than 1% to more than 5% from January, February, March to April, May, June. So, but by July, August, September, it declined again from 5.01% to 4.01%. So, GDP follows seasonal pattern. If you compare first quarter GDP to first quarter GDP of 2020, you notice that economic growth follows seasons, rainfall pattern, the time budget was passed, the time budget implementation started, the period in which farmers go planting and when they're harvesting. So what happened in the third quarter of 2021 that GDP declined? Don't forget, third quarter is July, August, September. This is the peak of rain in general. So and the capacity for projects to go on within this period in terms of the needed capital expenditure that will fuel completion of projects reduced. So these are some of the seasonal factors that affected our GDP growth in the third quarter of 2021. And not just 2021, every third quarter in general. In terms of, if you seasonalize GDP growth, you notice that third quarter growth always have that reduction in growth from agriculture sector, which is more of a planting period, and then even for construction and investment, everything halts. Nobody's building, nobody's buying cement, nobody is going out early in the morning. Even the upper women on the road, the people selling on the roadside cannot even go out as early.
So there's
to
a
sell.
drop in productivity.
Yes, because of rain and other seasonal factors that affects that period. So it's a normal issue for GDP to decline across the calendar months because of its seasonal characteristics. So what is important is to take an average growth of GDP to see how we are performing. But by and large, what that drop in GDP in the third quarter signals is that our economy is still heavily public sector driven. If it's private sector always innovates to overcome challenges, including that of rain. But for our economy, which is largely public sector, once government is not releasing funds for contractors, or when contractors halt their construction activities, it affects stock of money in circulation, productivity, and overall GDP in terms of even import, because nobody's importing capital import again to continue their construction and things like that. So GDP decline in the third quarter economically is not something that we are unaware of. It's just the seasonal characteristic of GDP. What's important is that our GDP is doing relatively well across the quarters and is for now way above 4%.
Okay. Now with all these indices, as we look forward to 2022, is it looking bright?
As we look forward to 2022, there are a lot of factors internationally and domestically that signal some form of risks. COVID-19, as we all know it, is a health challenge, but has investment, serves as an investment risk factor in terms of big investors, in terms of all the effort we are making to attract foreign direct investment. Everybody's slowing down because they are not sure how demand for their products will look like in 2022 because of uncertainty of COVID-19. Travel decisions and things like that are factors that are also likely to affect the aviation sector and spill over into other sectors. Don't forget, when airport businesses are not doing well, there are businesses that are housed in airports. All these duty-free businesses and the rest. So it's a chain that connects every other sector. So COVID-19 is a risk that 2022 still has risk in terms of, not in terms of so many debts, God forbid, but in terms of investors halting decisions to invest. Then domestically, we are still looking at our unstable growth. You know, we just said that GDP was 0.51 in first quarter, 5 point in second quarter, dropped again. This, for its economies, this is uncertainty in growth, accompanied, correlated by insecurity and other challenges that is making it difficult for investors to travel across the country. All these uncertainties also affect the domestic investor. The students who move from Lagos to Maiduguri to Niger State to Benue, back to Zaria, are all halting their demand for higher institutions choices. And this will also affect domestic investment decisions. So domestically, there are risks. There's also inflationary risks. Inflation, yes, it's on a declining trend, but it's still double digit. And double digit inflation means weaker value of money and then higher price of goods and services. So inflation risks, high interest rate risks, COVID-19 risks, health risks, insecurity risks, a lot of risks. Where we don't have too much risks is from the aspect of government spending. But government spending, again, is challenged by inability or uncertainty to be able to say that this is the money we'll use to fund government budget. So there's a lot of uncertainty around our economy. So the outlook for 2022 is that growth will be attained, but it will still be a creeping level of growth consolidating on the entire 2021. But it will be dependent again on COVID-19 and the ability of the international market to keep crude oil prices stable. Don't forget, Nigeria economy also launched National Development Plan 2021 to 2025 for 2022 and beyond. That document programs crude oil price to be $40 per barrel from 2021 to 2025. And currently, crude oil price is above 70. Even the budget that will soon be signed by the president on Friday has a $62 per barrel benchmark. So even our National Development Plan is a document that contains risks because it pegs crude oil price at $40 per barrel for the entire 4 years, but did not make provision for where the excess crude, the savings from the excess will be kept and how it will be used to refinance our government spending programs and projects. So this is one aspect. These are the risk factors that we can handle. These are the low-hanging fruits that government can use to make 2022 look robust in terms of projection. But generally speaking, what is important is that where there's life, there's hope. And we thank God for the impact of our religious sector on our economy and how we are doing well in terms of, in terms of, how will I say it now, disappointing every projection on our economy from COVID-19. Okay. So if Nigerians can become more innovative to take advantage of domestic opportunities, 2022 is a great year, will be a great year by God's grace for Nigerians and our economy in general.
And we really look forward to 2022. It's been quite a discussion. Thank you so much for coming on the program.